The primary reason why we chose Atoms over YCombinator was that it was such a personalized experience. The partner interaction that we had was very, very laser focused on the problem we were solving. Getting clarity on who we're solving for, what the solution was, and how big the market is. It never felt like a time box process. It was very, very long term. They have this thing called Founders Anonymous.
So what do you think helped you crack the application?
With other accelerators, you don't necessarily know who's going to be mentoring you. And if you put in a lot, you get a lot of.
Let's talk about money.
It was a
Let's just dive right in, Rahul. Could you walk us through why you decided to focus on getting into Accel Atoms over YC?
Yeah, for sure. So let me take you back to 2022. So we were actually one of the first few cohorts of Accel Atoms. So I'll talk to you about like what stage we were in at that point. So at that point in 2022, I'd already interviewed with YC maybe like 2 times, got on like their rapid fire 10-minute questions and stuff. At that stage, we were basically at the idea stage. So we were like kind of figuring out how to raise our next round of funding. How do we sort of get into a cohort or like a accelerator that helps us find product market fit? And it was a different time, right? Back then, like obviously ChatGPT never came around. So things were very different with how companies were getting funded. At that stage, someone we knew actually applied to the first cohort of Accel Atoms, which we'll get into in a bit, and how word of mouth helped us. But the primary reason why we chose Atoms over Y Combinator was that it was such a personalized experience. Even the interview process, right? It wasn't like there was any rapid fire questions, or it wasn't like a college interview or any of that stuff. It was very mature about company building, thinking about the problem space and so on. So I think that was the first like sort of trigger for us. And of course, the second piece was the Accel branding itself is actually pretty huge. Accel is a global VC firm, for those that don't know, with presence in multiple countries. And they've backed companies like Facebook and, Segment and so on. And we thought just being under that sort of umbrella of having Accel branding would attract future funding for us, and also being able to attract like talent and so on and so forth. Now, having said that, I think YC has a great branding as well. But I just thought that having interviewed with them and going through the interview process with Accel Atoms was way more personalized. And I thought the program itself would be a much better experience than going through YC.
So was there anything else that you were really looking for when you were evaluating different programs and accelerators?
Yeah, I think there are about 2 to 3 key things. One is in the short term, you sort of want to get funded and you want to get funded in like decent terms, and it has to be quick, right? Like when we were in the idea stage, we wanted to have capital to go and validate our hypothesis in the market. And we also wanted sort of guidance on whether we're working on the right problem or not. So that sort of comes under the umbrella of product market fit. And Axel had a lot of partners who've seen the story play out multiple times before, especially our partner, Shaker, has invested in, I believe, almost 5 or 6 unicorns, and first investor in Freshworks. So he's sort of seen the 0 to 1 phase. And we wanted that sort of guidance for us when we were sort of evaluating which path we would take, how we would shape our idea, who would we talk to, and so on. So I think I would say, if we were to distill down, I would say like the first check, someone who can put in like a round of funding quickly without sort of going through too much legal and so on and so forth. So because once you have funding in the bank, you don't have to worry about too many things, and like payroll, you can hire your first engineer, you can get up and running and have those customer interviews. Secondly, guidance on if you're working on the right problem or not, right? Like I think one of the things that gets really hard as you progress is sort of changing your idea and pivoting. Like the later you are in the process, the harder it is to pivot. So sort of having that guidance into whether a market is big, whether it's a growing market, whether it's a shrinking market, also having conversations with other founders who might be in sort of adjacent spaces and telling you things that may not necessarily work in that area. These are very important questions we had to answer, because as engineers and builders, it's very easy to rush into things and start building, right? And you sort of want to resist that urge and temptation to building and shipping, which I thought actually was something very unique about Accel Atoms as well. I think Y Combinator, specifically, nothing against them. I really have a lot of respect, but I think a lot of it felt like it was optimized for like the 3 months and demo day. And so you tend to get into this sort of FOMO-based shipping. I'll just ship anything and then kind of see, which was okay. A lot of great companies come out of that because you like read about people pivoting like 12 times and stuff. But Atoms was the at least our experience was like completely different, right? It was like, let us build this hypothesis around a space and very like build a mental map or a idea maze first and then go and build, because we knew we could always build. My co-founder Vishak and I are engineers and builders. We knew we would always do that at some point, but we wanted to make sure that we build in the right space, ask the right problems, make sure it's a big TAM and stuff. And I can see why this was sort of the core of Accel Atoms, is because they're like a very big VC firm, right? Like one of the largest. So for them, a venture outcome is what they focus on, right? And then so it made a lot of sense for us to sort of think along the same lines and build a company towards that.
Got it. A lot of things to actually dive into over here, and I'm excited about that. But from what you said, the thing that at least I took away as the big difference between YC versus Axel Atoms was YC would push you to build, go and raise a round during demo day, versus Axel Atoms is more like, hey, let's actually figure out what company you want to end up dedicating the rest of your life to, and spend a lot of time on the research side and really helping guide you to really a venture scale outcome. Right? Is that a fair understanding?
Absolutely. I'll tell you a simple example. In the interview process between YC and Accel Atoms, YC focuses on velocity of what you've shipped. What have you done since when you applied till when the interview happens, right? So like, what features did you ship? That's what they're looking at in those 10 minutes. Accel Atoms always comes back to you, or Accel in general, right? Like the partner interaction that we had was very, very laser focused on the problem we were solving. Getting clarity on who we're solving for, what the solution was at that stage, or at least what we thought was the right solution, and how big the market is, rather than like sort of understanding what we shipped in the last few days and what kind of progress we made. The progress was on a different front. It was not necessarily on sort of shipping features and product. It was on progress, was on insights that we had from the market. And insights came from like conversations and obviously and all that stuff. So I think fundamentally that was the difference. It never felt like a time box process. It was very, very long term in their thought process. And I can say that a lot of it boils down to the culture inside Accel as well, right? Like a lot of it is very like founder first, and like they help you take your time and sort of understand, the limitations of certain markets and stuff. So for instance, if you're in manufacturing and you cannot close deals, the sales cycles are not like 2 weeks. They're not PLG, right? Like they're like year long. They understand that. They're like, okay, they give a founder a certain amount of time and space and so on and so forth, as opposed to having like a generic framework towards company building. So I thought that was a fundamental difference. 100% agree with you.
Got it. Let's talk about the application process. What was that like? You touched on it a little bit, but would love to understand that in a little bit more detail.
Yeah, for sure. So like YC or Surge, there was a form that we had to fill. Actually, the application process gets you to think with more clarity. I always felt that YC's application process is fantastic. It helps you to think with a lot of clarity on what you're solving and who you're solving for and stuff. For Accel Atoms, it was very similar. It was like what problem we are focusing on, how big is the market, less so much on like how much revenue we've made or how much progress we've made. There is a part to that, but it's more around like, hey, can you sort of convince me that this is a problem for a large set of people with sort of you've thought through and got to certain insights in the market that you can convince me that I'm going to invest in you. So there was a form that we had to fill. There were multiple rounds of back and forth that we did with the Accel folks. In 2022, they were still a little early. They were figuring out the program and stuff. I know it's changed a lot. They've taken a lot of feedback and gotten more clarity on like the kind of questions that they were asking. But back then it was a little fluid. So we had multiple rounds of interviews with Shaker. Actually, the fun fact was that we were trying to raise our seed round at that stage. And we spoke to multiple firms as well, part of the process. And YC and Atoms were the two accelerators we spoke to at that stage. We spoke to firms after we actually spoke to Accel as well, because we made a little bit of progress and stuff. Now, at that stage, they came back to us and they said, we're doing this Atoms thing. You'll be a great fit for it because you've not yet sort of figured out product market fit. And we kind of agreed with that. And then we said, okay, great. We'll love to work closely with sort of a partner in finding product market fit. A lot of the application process and the back and forth was focused on the problem that we were solving, getting clarity on that and why it's a large enough problem to even be worth spending time on. We did a mini master's or a PhD in the data space at that stage, because we would have multiple documents that we would write and so on. Now, I don't think people listening to this should get scared. I think it's a fantastic way to sort of go deep into the market. I think back to my point around like sort of resisting the urge to jump into a problem is to sort of actually sit down and write about stuff and like think through, right? What does the idea maze look like and so on. There's two ways. One is you can sort of think through, talk to people and do it. The other is you can like sort of ship, and it takes like 18 months to get feedback into the market and sort of get these insights. We actually went the first route, which is like, hey, we ourselves thought based on our experience, talking to people, going deep into the market, what problem we were solving. And that was basically our application process.
Got it. Interesting. So you were looking to raise a seed round. You spoke to Shaker, who's basically the godfather of SaaS in India, is or SaaS investing in India. They were interested in the space, I'm guessing, and they were basically looking at how much you understood the market. And then they were like, hey, since you guys haven't figured out product market fit yet, why don't you actually end up applying to Accel Atoms? So you filled out the application and applied. What's that essentially?
Yeah, exactly. Right. So that's exactly what happened. I think
This basically leads me to my next question. So what do you think helped you crack the application? Was it just that they believed in you and your co-founder and they thought you understood the market well? Was there anything else?
why are you uniquely positioned to solve a certain problem? So I came with multiple years of working in the tech space as an ML engineer, as a sort of software engineer, and I understood the data infrastructure space. Vishak also similarly. So I think they believed, one, that we are rightly positioned to take on this challenge and tackle this problem. Second, I think that there was also not many companies from India solving in the data space at that stage. Obviously, they wanted to form a hypothesis around it. They were interested in the data space and so on. Thirdly, I think for Atom specifically, they wanted people who could like give back to the community and so on, have experience and like, share ideas. There's definitely a part to that, but I don't think it's the majority of it. Part of it is like sort of giving back to the community, helping founders from like different areas. And maybe if we do make it, come back to the cohort and give advice to the next cohort that is coming in and so on and so forth. So that was definitely part of it as well.
I really think community is so important when it comes to entrepreneurship. People you can actually end up leaning on. It's hard. So these kinds of things go a long way.
They have this thing called Founders Anonymous, which a bunch of founders get together and there is no like external VC or anything. It's just purely founders. And you talk to each other about your problem, no filters, right? Like typically what tends to happen is when you're trying to hire or when you have investors, you're trying to like kind of sometimes sugarcoat things a little bit. You know how it happens, right? Like how things going with your business. You're like, wow, it's great. But like on the day to day, there's a lot of struggle. You don't necessarily open up until a few minutes later. Whereas with Founders Anonymous, it's just like sort of, you try and understand people who could be like 2 to 3 stages ahead, giving you advice on like, hey, why don't do this, don't get into this market, or like don't raise from this particular VC firm, and very unfiltered sort of conversation. They facilitate that.
So you already touched on some of these things, but what were your first impressions of the program? What was it like when you actually got in?
Back in 2022, when it was the second cohort, right? So they were still sort of figuring out a lot of, like, there was no structure to it. So they were figuring out a lot of the structure, which was a good thing because it was very open and fluid. And also, not to say that it was not organized, right? Like Axel does a great job of like throwing like dinners and like events and stuff. When the first time we got in, we were just sort of moved by the pace at which they were moving things. They had like a dedicated team sort of organizing like these weekly Zoom calls with like, we had Nitin Kamath on one of the Zoom calls. Then we had the CTO of Urban Company. We had the chief HR officer of Freshworks come and share her stories. ChargeBee, Krish from ChargeBee came and shared his wartime story. So we had all these events. We were kind of rushed into it and it was great, right? Like it was all about learnings and like sort of taking in things. I believe YC does these dinners as well. But Accel Atoms was uniquely focused on Indian founders. We had two types of Indian founders. Those were building for India, like Bharat, and those that are like you and me, which are building global companies out of India, right? So both were really great to interact with and talk to. You can always learn from other founders, but like we would have these like open sessions with them. We could ask them anything, and you can ask them about the business, obviously, and so on and so forth. And we were rushed into it, and I think we would also have weekly meetings with the partners. So getting Shaker's time is super valuable even today. And I think that was the other big attracting thing for us at Axel was that with other sort of accelerators, you don't necessarily know who's going to be mentoring you. Over here, you're assigned your mentor upfront, and typically it's a partner. So you're taken under the wings of a partner, and the beauty is that you're treated the same as 100 million ARR company, right? Like there is no differentiation here. So you can book a time slot, you can talk to them, you can ask them about like a bunch of different questions. You can go talk to other partners as well. So I remember going and talking to Prayank and Anand. Anand is invested in like Swiggy and stuff. So you get a lot of like varied exposure. There are no like boundaries. We were thrown right into it. I came with a lot of learnings at that stage. It was really great exposure for us as well. And in terms of product market fit, obviously like the engine was that, hey, we make intros to customers. Why don't, here are the questions you should be asking. Here are the things that you need to be thinking about and so on and so forth. So there was a lot of that like refinement and constant sort of conversations with not just the partners, but also like intros to customers and stuff that they made in their portfolio.
Very, very insightful. I feel like at least you guys got a lot out of it. It's not easy to get time from a lot of these folks. Let's talk about money. Talk to me about the terms of the program. How much money did they invest? What did they take in return? Yeah, the audience want to know.
Yeah, absolutely. So things have changed since 2022, the time that we raised till now. The first, I believe, few cohorts, it was a 250K check back then. It was very clear on the website. It was a 250K check, which is uncapped note. So the idea was they put in 250K for you to find product market fit. Very, very clear. And it made a lot of sense. Very, very aligned to the value that you're going to get. Because you don't have product market fit, you're still de-risking that. You want to take a little bit of money, sort of have those customer conversations, build early product, maybe get feedback, build your designs and stuff. And the thing that happens with Accel, which is a big advantage, is that when you raise that's considered as a pre-seed round. So when you do a seed round, they typically are either the ones that lead the round or the ones that match. Let's say you bring in another investor. I believe now the terms have changed. So they invest up to $1 million. And obviously, you're probably given a valuation. The amount of percentage that they take varies depending on the stage of your company. So if you're very early stage, they probably see a little bit more risk in it. If you're like, you have some revenue, you probably have better negotiation terms and stuff. For us, it was the uncapped, obviously an MFN that kicked in after we raised a little bit more than $5 million. And now I believe the terms have changed. They invest up to $1 million, and the value is still the same. I think it's just great now. In fact, I was teasing them saying, hey, why didn't we get so much money and stuff? But I think they're pricing the rounds now as well.
Got it. Just for the audience, when you say an uncapped note and you getting $250,000, that essentially means that whenever you end up raising your next round, let's assume it's for $25 million.
Yeah.
Axel will end up getting 1% because 250K of $25 million is 1%. That's sort of how it was structured.
Correct. That's correct. And there was another clause, which is that Accel would also get, it's called an MFN, which YC does too. And that clause says that whoever gets the best terms, Accel gets the best terms as well. So like when you raise, let's say at $20 million or $20 million and someone is getting maybe like a 60% discount, Accel gets 60% discount, right? For instance, I'm just throwing that out there. Whatever the terms are at that stage, Accel will be able to get those terms.
Got it. So it's almost like right to first buy. So you get a deal. Accel gets the right to also end up like matching that deal if they want.
Correct. And I'll say this, I think it was super founder friendly because at that stage, you don't want to be sort of negotiating between like a few percentage points and stuff. You just want to get money in the bank and go figure out product market fit. You also don't want to be doing too much legal work, sort of pricing it around at that stage, right? I know you hate that, but I think that you don't want to be spending a lot of time sort of figuring out what the actual valuation of your company is at that stage. It's like a
more art at that point.
Exactly. YC invented the safe so the founders can move quickly. You want to be optimizing on like sort of customer conversations and product market fit as opposed to like negotiating your terms and stuff.
Got it. Makes sense. And yeah, with 250K, you should end up figuring out product market fit. Or 99% of the businesses out there should be able to figure that out in that kind of money, especially if you're sitting out of India. But yeah.
Yeah, exactly. And I think that the other thing you can potentially do, which Accel did, I want to make note of that, is they have a community of angel investors across the world. So we had the head of Google, the guy who led Google Pay India and all these other fantastic angel investors across the world who have invested in other Accel companies. They get to participate as well. So you can, on top of the 250K, you can raise more angel money. And it obviously comes with the branding. It gets a little easier with Accel putting a check. So you can, and if you feel like 250K is not enough, you maybe need another 200K, you can go out and do that. They're totally fine with that. Right?
Got it. No, makes sense. Yeah, and just for the audience out there, YC typically invests $500,000 as a part of their program. And it's in two parts, 125K for 7% of the business. That part is priced. And then they end up putting 375K as like an uncapped safe, similar to what Accel did with Rahul and DataBrains. So that's how the YC deal is, at least as of now. So just for folks out there. All right, we're coming to the home stretch now. If you could say the top 3 benefits that you guys got out of being a part of Accel Atoms, what would they be?
Let me break that down. The first thing I would say is access to the Accel umbrella of partners, just their sort of experience of building like long-term companies, right? I think it rewired us into thinking about building like a long-term company and long-term business, thinking through big, large problems. And I think that came from the Accel branding. I think that is a big benefit that we took out of it. And of course, with that comes like, you can go hire people, you can raise more additional funding and all that stuff is fantastic. So I would say if I were to distill that piece down, even though we were like one of their tiny checks, we were still treated as one of their like other portfolio companies. There was no differentiation. We were rubbing shoulders with companies that have raised $20 million and so on and so forth. We were given the same legal teams that like for companies that have raised like $20 million and stuff like that. I think number one was the sort of like the branding. Number two, I would say more specific to Shaker as well, the partner, into sort of thinking about like large problems and resisting the urge to ship quickly and think through your problem, distilling it down, getting insights into the market, and so slowly building your hypothesis around what areas you want to tackle and then going and building sort of a company around it and so on and so forth. As opposed to like shipping quickly and sort of pivoting and so on. I don't think there is one right way to build a company. But I thought this sort of aligned well with how we thought about the world as well and the area that we were operating in. And third, of course, I would say the terms were fantastic. This is something I haven't mentioned, is I actually had a term sheet for $1 million at that point, which I did not take because of the first two reasons. The Accel branding as well as my interaction with the partner. And the icing on the cake was the terms, right? Like it was 250K check, quick and easy. It was going to be wired into your account and so that you can focus on the business. The terms are fantastic. And then we were like, okay, great, let's go with this. This makes total sense. This is enough for us to figure out like some slight TMF, and then we'll go raise additional funding. And so these were the three sort of big things for us. What we also realized was like the community was great and all that stuff later on. But yeah.
Got it. Got it. No, makes total sense. So being a part of the overall Axel brand and being able to interface with different partners and the overall Axel network and founders, that was huge for you. The specific partner you work with, Shaker. And the third thing being the terms being very founder friendly and just allowing you to focus on getting to PMF. Makes total sense.
Yeah.
How long was the program, by the way?
About 6 months.
6 months. Got
Yeah.
it. What are things like for you post the program? Is that where the community and all that kicks in? Like, how much support do you still get?
Yeah. So the post the program too, the community kicks in big time. You get a lot of support around some of the tools and perks that they have. So they give, actually, this is very interesting to the viewers, is that they give you a lot of credits. And we got like almost, I would say, 50 to 75K of AWS credits through them. And then like so many other different vendors as well, which is basically, you could think of it like another angel investment, right? There's so many founders that I've met who have stayed in touch with. They do like an annual event and so on. I think in general, they're very, very nice about that. They have a sort of great team that works on that. And I think that is on the soft side. I would say on the hard side, here is the interesting thing. Axel, always you have access to the main fund. So even if the program ends and your business is continuing, let's say you're not doing so well as a business, you always have someone to go and talk to and say, hey, look, there is something out there in our business. Can we may not be like a crazy round that you might raise, but it might be a bridge round or something tiny that to sort of keep the oxygen going. You always have that backing on the sort of downside. And then the upside, you can always go and raise a seed round from them, right? Whenever you're ready and they see fit, you have direct access to them, right? You don't have to build a relationship with the partners and investors all over again, which takes time. And I think that is a huge benefit, right? Like let's say you want to raise your seed round or your Series A, they're always there.
One of the things about YC, and I've noticed this, they're very sort of incestuous in the sense that, hey, you're in YC, especially if you're a SaaS company, you sell to all the other YC companies and you
Yeah.
quickly get to like 1 million, 5 million, et cetera, and you grow really quickly. I'm curious to know, did Axel sort of help you with that in terms of opening up doors for customer conversations and so on? Did you end up managing to close deals? And I know there's the Axel India fund as was the Axel US. Did you get any access to the Axel US companies as well? So
Yeah.
I'm curious about that.
Great point. Actually, quite the quite the opposite is, and I think it fundamentally boils down to one of the first points we were talking about, which is optimizing on growth versus optimizing on long-term thinking. Our partner was very aware that we can very easily make intros to existing companies and they'll be pressured to use our product because an intro came from one of the top people. But that is not great signal into how the market buys, right? Like let's say you want to sell to a random person tomorrow, they're not going to be buying because someone make a referral, but they're not going to be coerced into buying. Like these are big decisions that you're going to make, right? Like, so you have to sell to random people on the internet, and they were very aware of that. So, a lot of it boiled down to long-term thinking about the health of the business as opposed to optimizing for, sort of quick growth and like closing deals and like, and whoever it takes to sell to and logos and stuff. So they were very, very conscious of that. We did have access. I would always ask intros to portfolio companies, but they would make the intro, but they were very aware that like what the decision is going to be. And we were because of that, we sort of understood like, okay, let's sort of draw a line between who's buying because it's an intro versus who's buying because it's a real pain and stuff. So Axel was very, very conscious of that.
Got it.
But I see that a lot in accelerators, right? Like selling into a very incestuous sort of.
What's the best way for people to get in touch with you?
Yeah.
Email or LinkedIn, whatever's best for you. You can just throw that out there.
Yeah, you can find me on LinkedIn. I'm Rahul Patamatta, or you can add me on Twitter, RPATM, RPATM. I tweet every now and then. I try and make a little bit of sense, I hope. But yeah, that's the best way to find me. If not, email rahul@usedatabrain.com. So
Cool.
yeah, thanks for having me.